Welcome, dear traders. In Japan, economic data on retail sales and industrial production was released today. Australia released reports on building approvals and capital spending. The markets also received important data on China's economic activity, and this and other news affected the movement of the major currencies in the Asia-Pacific region, and we will talk about them in our video review. The Chinese economy still does not give reasons for optimism. Thus, the manufacturing sector in November did not meet expectations and fell to 49.4 points. The economic growth in China's services sector has also decreased. Against the background of weak demand, new orders decreased, employment fell, and export sales declined the most over the past 4 months. As a result, the composite PMI slipped to its lowest level since December 2022 at 50.4 points. Beijing has tried to bolster business sentiment through bond sales in recent months. However, it has not been enough against a protracted real estate crisis, persistent deflation, and external risks. Therefore, the current disappointing data may provoke the Chinese authorities to adopt additional incentives to support the country's economy. Notably, the US dollar failed to gain any traction in Asia amid weak data from China today. On the contrary, the greenback lost 2.6% against the yuan. The US dollar index, although posting green figures, looked sluggish and consolidated within the narrow range of 102.70 and 103.00. Meanwhile, the US economic reports and the Fed prospects are the main reasons for the US dollar weakness. Yesterday's US GDP report showed that the US economy grew by 5.2% in the third quarter. As a result, the US dollar rebounded from the support level of 102.50 against its major counterparts and rose to 103 points early Thursday. However, positive economic data was offset by most dovish comments from the Fed policymakers. In addition, US Treasury yields slumped the most this week since the US banking crisis in early spring. Earlier this week, Chicago Fed President Austan Goolsbee noted significant progress in reducing inflation. Member of the Federal Reserve Board of Governors Christopher Waller supported a rate cut in the coming months. Given that he has always maintained a strictly hawkish stance, his sudden dovish reversal had a double effect. Markets are also speculating that Goolsbee may have discussed his position with Jerome Powell in advance. Meanwhile, the Fed chief is scheduled to speak tomorrow. Today, Asia-Pacific currencies are still trading under the influence of local news. For example, the dollar-yen pair is declining moderately after the release of fresh economic statistics from Japan. According to today's reports, Japan's industrial production increased by 1%, and this makes October the second month of industrial recovery, mainly due to the production of electronic parts, automobiles, and electrical equipment. On a year-over-year basis, the index has also improved for the first time in 3 months. As for the dollar-yen pair, bulls have to defend their positions, and the pair's exchange rate is falling for the 5th session in a row. And the US Consumer Price Index is released, the Japanese currency continues to strengthen within the range of 146.80 and 147.30. In early Thursday trading, it consolidated its recent gains near 147. Wednesday's multi-month low of 146.65 is now seen as a near-term support level. On the other hand, the 147.30 and 147.90 levels offer resistance ahead of the level of 148. However, any further upward movement risks attracting sellers and limiting the Japanese pair's growth. Today, the Australian dollar attempted to reach the 0.6650 level. As a result, it broke out of a tight range of 0.6614 and 0.6625 for several hours. The Aussie's main boost came from a 4% jump in the oil prices. In addition, disappointing data on the Chinese economy worked in favor of anti-Putin currencies. After all, the data is expected to force the Chinese authorities to provide additional stimulus. Notably, what's good for the Chinese market is good for its trading partners in the region. However, the Australian currency's enthusiasm was short-lived. As a result, its growth momentum faded and the price retreated into the previous consolidation range near 0.6620. One of the main reasons for the Aussie's sharp spike was the capital expenditure data. Not only did the index fall sharply in the third quarter, but indicated a decline in both current and future investment in the country's private sector. This outlook could dampen inflationary pressures and also reduce the likelihood of an interest rate hike by the Reserve Bank of Australia. As for the New Zealand pair, it continued its bullish trend during the Asian trading session. The Kiwi rose to the yesterday's high of 0.6172 and reacted to a new high of 0.6182. Early Thursday, bulls supported the currency within the 0.6152 and 0.6184 range. The New Zealand dollar also seems likely to continue strengthening. However, it will need two conditions today: weak data on the US economy and the US dollar retreat. However, the Kiwi may lack the momentum to break through the resistance of 0.6225. And that's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below and see you soon.